Hi, this is Zach here with the best of the Q1 stock rises here at Zach's Traders Cafe on Saturday, the 30th of March. Starting off with Beeks Financial, which went up and stayed up, which was something which was a bit of a new phenomenon for us to start this year. You can see that helping the percentage rise that the shares managed, the shares were also actually at the turn of the year near their low, so really basically up from the £1.80 area to £1.74 at the moment. We had a massive unfilled gap to the upside through the 200-day moving average and then broke out that gap high day around £1.53. Current situation is that we've hit our initial target there around £1.45 and looking for the second target there as high as £1.90. Hopefully we'll see that by the end of April while we'll remain above the £1.60 area. The whole thing helped last month by a golden cross between the 50 and 200-day lines, and the shares built on that. Moving on to a stock which I have to say is rather a surprising inclusion in the selection. Here you can see that Feedback managed to break that falling wedge in the 50-day moving average right at the end of last month around the 67 pence area. Never really looked back since then, so went up and stayed up. We had a golden cross there between the 50 and 200-day lines and an awful gap to the upside as well earlier this month. Above the £1.20 area in the floor of that gap, the latest gap there looking for £1.50 plus, hopefully by the end of next month. GCM Resources, another winner, and here we spotted it at the time. The reason for that is that there was a gap close buy signal, so the shares gapped down at the beginning of February, but then gapped up through the top of that gap there, the gap down around the 2 3/4 pence level. Haven't really looked back since then. Looks like we've got a mid-move consolidation now between 7 pence and 10 pence, looking for an end-of-day close through 10 pence to give us a move up to 15 pence, hopefully as soon as the end of May or even sooner. The next contender is one of the most followed stocks of the moment, and even though we're well off the best levels, I think we rallied from about 0.18 to 3.5 pence in, well, basically the end of January, beginning of February. We're well down on that now, but key now is holding really the 1.1 pence area. That was the support on the way up, and we'd like to see an end of day close back above 1.2 pence, which was the initial March support, to then give the shares a chance of heading up to the still rising 50-day moving average at 1.63, perhaps by the end of next month. If we do break down and stay below 1.1 pence, there's the risk of a move down to 0.5 or even 0.75, that kind of area, on the basis that we've just had a mid-move breakdown below that 1.1 pence area, but still to be revealed there. A stock which is less familiar maybe to most is Harvest Minerals, and here once again the shares were at the lows at the turn of the year, so not difficult to give us a decent percentage raise now. Broke through the 50-day line mid-January, and after a little bit of a hiccup in February, we pushed higher. Initial target here was that resistance line projection from October around 1.5 pence. Above that, we're looking for up to 2.1 pence, and the shares filling that September gap down. But at least we have stayed above the old January resistance around 1.4 pence, and the longer that remains the case, the better the chance of a new leg to the upside. Stock that did us proud over the period was Hornby, also a stock which was at the lows at the turn of the year. Went up and stayed up, and the current situation is that we seem to be finding support around or above the 35 pence level, still looking for 46 pence maybe by the end of next month to finish off the hopefully the first phase of this rally, which has taken the stock up from 15 to 38 over the near term. Next up is Hydrogen Utopia, where there was M&A activity, which briefly took the shares up to the 14 pence plus area. We had the inkling and the notion that the shares were going to rise off the back of the extended rising uptrend line in the RSI window, breaking the 50-day line there, and doing that at the end of January. The consolidation above the 200-day line also helpful. Current situation is that we'd like to see the shares remain above the 50-day line at 7.25, and then maybe partially retest the best levels up towards 11 pence. Resistance on the way down, maybe by the end of next month. Moving on to Itim, and here the shares gapped up through the the 200-day moving average at the end of last month, and so currently are hanging above the peak of that day, around 42 pence. The longer they do that, the better the chance of a move up to the top of the rising trend channel base from March last year, as high as 56 pence by the end of April. We're backed by a golden cross buy signal over the last week or two. On to Itim, where I think I'm going to personally actually charts this, and here you can see another situation where we were at the lows at the turn of the year. Also helpful here was the sideways shuffle above a rising 200-day moving, 50-day moving average rather, and then the unfilled gap to the upside. V-shaped bull flag is quite encouraging and suggests that we could at least hit £3 by the end of next month, while we're above the £2.50 zone. On to Narf, and here stock that behaves itself. Unfilled gap to the upside through the 200-day moving average, and then another gap above the 200-day line. V-shaped bull flag again, suggesting that we've got a new leg to the upside, and that means we're looking for up to 2.2 pence by the end of May, while we remain above our initial target there around 1.2 pence. On to Powerhouse Energy, which did the bulls proud with the unfilled gap to the upside through the 50-day moving average. Really a bit of a giveaway signal, that implying an entry through the 0.5 pence level at the latest. Initial target there was around 0.55. Above that, we were looking for the 0.8 area, basically, because that was the old peak in August, and then after that up towards 1.35, just shy of that so far, but the longer we stay above a penny, the greater the chance of a move up to 1.35, 1.4 pence, hopefully by the end of next month. Renalytix, another decent winner here. Here we spotted that break that the shares had through the 50-day line, looking for just around the 23-24 pence level, and obviously the shares blew the doors off, actually going through the 200-day line, which they've done twice. Hoping for a third time now, while we're above the 50-day moving average at 27 pence, hopefully up to 55 pence plus as soon as the end of next month. If you're cautious, you wait for an end-of-day close above that last March gap there at 37 pence before assuming there's going to be another flurry to the upside. It's been years in the making, but we've seen strategic minerals do well. Bear trap gap reversal from below the May to November support. That support around 0.12. The latest action here, a ricochet off a rising 50-day line around 0.22. Above that, we're looking for 0.36 as soon as the end of next month, which is the upper parallel of that broadening triangle from May last year. Finishing off with URA, where we're looking for those emeralds, and hopefully we'll see them by the end of next month. The current situation is that we're in this rising trend channel base, bounced above the rising 50-day line at around 1.8 pence, and the longer that stays as support, we're looking for a move to 2.8 pence, perhaps as soon as the end of next month, if that coincides with the emeralds being produced. That's it from me today. More updates over the weekend.